Hello and welcome to Credit Shift News and Update. I'm Paul Sweeney, co-founder and chief strategy officer here at Webio, and today I'm again joined by my co-founder at Webio and the CEO, Cormac O'Neill. We'll be exploring some of the recent news stories, events, reports, and trends in the credit industry. But before we get into all that, Cormac, how was your Christmas?
Hey, Paul. Happy New Year. I had a fantastic Christmas. I really did. It was hectic. Lots of socializing with family, friends, and neighbors. I always think Christmas is for kids, but you know what? Grown-ups tend to have a good time during Christmas too. So it was really good, relaxing, but lots of activities at the same time, lots of socializing. So all good, and really looking forward to 2024. I think it's going to be a really interesting year ahead in all things, but particularly in the industry that we play in. I think this is going to be a really interesting year for us. So how was your Christmas, Paul?
It was very unusual. I was indoors a lot. Like I almost think of it like it was a COVID Christmas, in that I hadn't made explicit plans to go like meet people and have dinners and bring people over and stuff. So I found that we were just like in the house an awful lot, and it just reminded me of, you can just need some downtime at times, and just like need to put down the phone, need to put down the computers and just read a book, just delete everything and just be, just kind of relax and just be for a while. Yeah. And I think a little part of your brain just kind of relaxes and maybe allows you to think a little bit clearer, because we're always walking around a little bit tense. We always have concerns in our minds about something. There's always a little nagging concern. I think any opportunity you get where you can just let that down, allows you to kind of strengthen yourself for the new year.
Yeah. Do you know what? Just on, I did a lot of reading myself actually, and I read it. Here's a plug here now, but I'll say it anyway. I read the latest Ross O'Carroll Kelly book. I don't know if anybody out there, our listeners, follows Ross O'Carroll Kelly, but I've pretty much read them all.
One of the only Irish philosophers still publishing,
exactly.
I believe.
Yeah, exactly. There's no doubt about that. But I think there was a couple of the books there that I thought kind of like, I don't know, I think we're losing a little bit here. But I thought his latest one was just right back on point. It was so funny. It was really, really good. I really enjoyed that. So yeah.
The thing about the books like you're mentioning here, like in its day, Dickens was seen as a kind of a throwaway storytelling, disposable kind of storyline book, and it turned out to be the classic of its time. And you can actually read a lot into the Ross O'Kelly books about the way Irish culture works, the way Dublin works, the way school systems works, the way networks of people work, the way privilege works. Yeah, it's I wouldn't dismiss it entirely as a book that's capturing the zeitgeist of the times.
So I've moved on from that, and I'm now reading Andre Agassi's book, which I should have read years ago, but didn't. So I'm kind of halfway through that.
Everyone says that's a classic.
Yeah, good, really.
Everyone says that's a classic of the genre.
Yeah. It is. It's a really good read. It really is. So I'm halfway through it. So let's see. Look, I know how the story ends, but hey, it's good to hear. It's good hearing it from the man himself. So
I still like the comment from his father, which says if he had it all to do again, he would have trained his son to play golf because the career is longer.
Yeah, that is interesting. Like what comes across from it. I know we're completely off topic here, but tennis is a really lonely sport when you're playing it. And Agassi describes it really, really well in terms of the loneliness, the two sides of the net, and never having any physical contact with your opponent whatsoever, right? Not even, I was watching the darts over Christmas, which was, unbelievable, really great entertainment. That's an individual sport, but there's lots of contact between the two players going in and out to the what's it called, the hockey and all of that, where, you know, even in golf, the two guys are walking beside each other and as they're doing around the golf and caddies and all of the above. Switch to tennis, and it's, you know, how he describes the loneliness of it is, I never thought of it. It's really good now, I have to say.
Well, I do reflect on, I know various education systems here in the UK put a lot of emphasis on team sports. And I think there's so much we learn from team sports that we unconsciously or consciously take into our workplaces, about how we work together, the position you play, being there for the team. You know, I think sport does have a lot to teach us. And the older I get, the more I realize how much we do take from the little crises, the little pressure moments that we have to deal with in a game, like whether you have to take the penalty or, you know, be in the goal to save the penalty. There are all these little crisis moments that build and often crush people. So I think it's an interesting thing. And I know that they're taking a lot more care these days than when we were young about how kids are coached and how to make sure that they're built up and, you know, they take smaller hits. They're not kind of exposed to being completely destroyed too early before they've built up some resources. Anyway, let's get into it. Let's look at some of the general industry news. So in mid-December, the Bank of England made the decision to maintain the bank rate at 5.25%. The Monetary Policy Committee has indicated that it expects this rate to stay constant until the third quarter of 2024. Following this period, there is an anticipation of a gradual decrease to 4.25% by the end of 2026. Concurrently, the Consumer Price Index inflation is projected to return to around 2% target by the end of 2025. The recent data from the Office of the National Statistics, for National Statistics, shows the UK economy experienced a contraction for the first time in 2 months in October. So the numbers are a bit behind here. The gross domestic product is estimated to have fallen 0.3% in October, following a growth of 0.2% in September. This downturn is particularly concerning as it indicates that the UK did not exhibit any signs of growth in the third quarter. I don't expect that to significantly change. A poll conducted by the Financial Times involving leading economists suggests that despite the anticipated fall in inflation, voters are unlikely to see a significant improvement in their living standards before the upcoming general election. The poll highlights that while people on low incomes may benefit from a substantial increase in the minimum wage and pensioners might enjoy favourable savings rates, renters and those renewing their mortgages are likely to face increased costs. Another notable trend identified by these economists is the necessity for a rise in public investments to 3.5% of GDP. This level is the average for nations in the OECD group of wealthier countries. Such an increase in public investment is deemed essential for creating a robust public infrastructure that can support economic growth. I guess, Cormac, again, we pick up little figures every week and we try and keep track of them and just see, are they telling us anything in general? And I think here the news is, again, not much growth happening in the UK economy, some need for some big lifts investment-wise. I don't know. Are you seeing anything?
No, I'll just there's a couple of things in here, right? So I think what's very interesting to watch from the sidelines in the next 2 quarters is the difference between opinions, say, with central banks and economists around where interest rates are going versus what the markets are saying, right? So the markets are saying, guys, you're wrong. You guys are going to have to cut your interest rates in the first half of the year, probably in Q2, and the central banks are saying no, we're not. It's going to be in the second half of the year and maybe even Q4, right? So I think that's one to just keep an eye on and watch with some interest to see who's going to be right on that. I think I can be corrected on this. Historically, if you look back, tends to be the markets that win these little games here, right? So, does tend to be the markets that kind of dictate, and central banks tend to be kind of like, okay, right, we're going to cut them a little sooner. So that's certainly one to watch. Just this week, I heard, I was on the radio, that Aldi, Lidl, supermarkets, they're cutting their prices again, and the price, and this is Irish now, but I think it's the same in the UK market. You know, the price of your weekly shop has dropped by 12% over the last month or so. There's been a number of price reductions, right? So, you know, we're starting to see that dampening effect happening from the result of rising interest rates. You know, I just, again, looking at real life examples, this time last year, right before the Christmas break, I bought a stack of logs for my fire, as I tend to always do around, you know, this time of year, because they run out. This year I did the exact same, and they were 40% cheaper, the same batch of logs, 40% cheaper this year than last year. Now, I know there was logistic problems, like most of these logs come from overseas and they're shipped in. So, but I was looking at the price and I was going, whoa, that's really, really, you know, really, really good versus last year. Now, maybe I got fleeced last year. I don't know. Maybe I just didn't shop around as I should have. But no, I think, again, that's just real life examples of what we're seeing in terms of prices coming down. So, you know, look, I think that's a good thing, right? Consumers have been really, really, really hit. You know, a lot of money has been taken out of people's pockets in the last 12 months. Look, there's a strong argument that's the right thing to do in terms of dampening inflation. But it's certainly worked. And I think if I was to put money, who's going to be right, the markets or the central banks? I'm going to put my chip on the markets and see what happens. There could be some welcome relief coming for all you variable mortgage and tracker mortgage holders out there. Hopefully, let's fingers crossed that we see that.
Yeah. I think it's it's often opaque. It's kind of like one of these big, like it's one of the big levers. It affects everyone. I certainly notice the difference in prices doing the shopping every week. It's you know, that number just keeps on going up, and I'm not buying anything that different.
Yeah, no, just to add in also, like, you know, that's from the consumer's point of view. But if you look at it from the enterprise point of view, whether you're an SME or large enterprise, you know, the cost of capital being so high prevents you from investing in projects that you otherwise might have borrowed to invest in, because you're kind of concerned that you'll get the return on that if the cost of that money is so high. So if we start to see a softening of interest rates, reduction of interest rates, you may see, you know, enterprises, include ourselves in this, right? So, you know, money is expensive at the moment. So, you know, you can't be borrowing at high interest rates. You need to get a really high return on what you're going to invest in. So, you know, that's another area that we should keep an eye on, you know.
Yeah, for sure. I think the other piece of news around was the projected, it was some it was a big amount, let's like say 3,000 or 30,000 companies projected to go into receivership this year because of the pressure on the finances, and the fact that, you know, it's not exactly certain if the market is performing as a market should, because there was so many COVID interventions, there was so many other market levers that were not in practice. So the market really hasn't kind of cleaned out what needed to be cleaned out. And maybe this is when that's going to happen, but that won't be great in an election year for whoever's in power. So
yeah, good point.
I'd expect something to happen there. Moving on to section 2, fintech, buy now, pay later, AI, and all that related good stuff. Chase has announced a new partnership with the UK's leading debt advisory service, StepChange. The partnership builds on Chase's existing vulnerable customer support and aims to help customers in difficult financial situations by providing them with easy-to-access, free expert debt advice and recommended debt solutions. Chase will direct vulnerable customers to StepChange's online debt advice tool. StepChange's Gail Arkle said 92% of the people we support say that they wish they'd asked for help earlier. And so working closely with leading organizations like Chase is crucial. to ensure we can identify and support customers who are experiencing financial difficulty as early as possible. I'd like to stop there for a second, Cormac. I think that's a pretty good development in the industry, and a fairly shocking number. Yeah.
Yeah, it's listen, you nailed that in one. This is good. This is a good news story in terms of, Chase working with our friends in Step Change. We're in this business, we're in this industry. We know it's no surprise to us that people are saying they wish they engage sooner with the companies they owe money to, because the only way you can get to a resolution is to start talking and start engaging, right? That's the business we're in. We know that for a fact, right? So it's great to see, and Step Change do a really, really great job of what they do, and I'm delighted to see that they're engaged with Chase, and I'm sure it's just going to lead to more and more engagement. Look, this is a win-win across the board. It's a win for customers who are in financial difficulty. It's a win for the enterprises that are owed money, because you'll get to resolutions quicker, and that's what everybody needs. So expect to see more of this in the year ahead in terms of financial institutions engaging with the likes of Step Change.
I agree.
So that's good. I'm 100% with you.
Yeah, I think that's one to watch for the year, definitely. Moving on, again, I think we might have covered something similar to this last year. Nearly a quarter, or 22% of Buy Now, Pay Later users have missed one or more repayments in the last 6 months to December 2023, leading to late payment fees in a quarter of cases, a mark against their credit score too, according to data from the nonprofit Centre for Financial Capability. More than a quarter of those users saw their credit scores decline and were contacted by debt collectors, the survey found. The research found that 34% of consumers between the ages of 18 and 24 were charged late fees, more than any other age group. Again, pause for this one. Like we're pointing out over and over again that this is going to happen. Here's more numbers coming through.
Christmas period, lots of shopping going on, right? So I have used, I think on previous calls, I said to you, Paul, that I said, hey, you know what, I'm going to try this Buy Now, Pay Later and see how I get on. And, I said to you, this is just unbelievably easy to get credit. Unbelievable. Small amounts, right? We're not talking large amounts. I used it again over Christmas because it's been almost at, and I don't want to start naming companies now or stores, but the few stores I was in over the Christmas period at the point of sale, this was offered to me. This was offered to me every single time. Do you want to pay in full, or do you want to do a Buy Now, Pay Later? Right. I took it up on one. I said, hey, why not? I'm going to Buy Now, Pay Later. 0% interest. It's 3 months. It's not a big ticket. Hey, let's do it. Because my other one has been fully paid. The first one I did. It's just unbelievably easy how you can get credit. And that's why that 22%, and you are right, we've been seeing this, that's going to increase. I'd love to know, and I'm sure we'll find out soon enough, what has the growth in Buy Now, Pay Later usage been over December 2023 versus December 2022? I'm not sure, were we still in lockdown around then? Anyway, but this year I really noticed that pretty much everywhere it's available as an option, and it's very tempting. It's very tempting. So
I even noticed it at B&Q myself. Yeah,
was it in B&Q? Yeah.
Yeah, I was buying some stuff, and there was a Buy Now, Pay Later. Yeah.
So it's, and the store agents are promoting it, right? They're saying at a point to checkout, do you want to pay now or buy now?
Well, you'll expand the basket size. That's the main thing. Like once you figure out that you don't have to leave more than $50 or euro on the counter today, you can get that extra thing that you were going to buy. So it's really the basket size expansion that happens. And I think you said something interesting there, even just as a way of organizing yourself. Once you'd paid off one, you felt free to do it again. And
100%.
And that's fine. That's one model, right? And I think I'm at the area now with subscriptions. Like I have Netflix, we have Prime TV with Prime from Amazon, we have Disney, right? And you kind of go, the prices are going to go up, right? They're going to go up by €2.50 a month from Amazon. And I kind of went, I don't really need this kind of thing. But I need the Amazon delivery service still. So I'm going to keep Prime, but I'm going to look at the others. Do I really need the Apple one? Do I really need the Disney one or whatever? And you've got to basket size a number of offers that you're going to keep in your head and say, I'm only doing 2. Like, that's it. I'm going to do Netflix and one other. And I think it's going to be the same with like your buy now, pay laters. You're going to have, I've got 3. I'm going to pay one off, but that gives me room for one more because I kind of keep 3 on the go. That's my number. I think there's something psychological about the way we put money into buckets and the way we manage those buckets that is very, it's going to be very impactful in the marketing.
Yeah.
As companies figure out where they are in that hierarchy.
Yeah. And you are correct. I mean, you said, you feel free to buy it again. And that was exactly it. I was like, hey, look, I've paid the other one off. I might as well do this again. It's not costing me anything, So, I gave it a whirl, so.
That money that you've got spare, like if you've got like a £200 in your deposit account left, and this is €100 expense item, you'd kind of prefer to have the €100 in your account still in case something happens and you need to pay for the kids' football boots or whatever that unexpected expense is. It's that amount of cash you have left in your main account that you really want to preserve and that you're going to push out and take off the next buy now, pay later offer. Anyway, I think it's going to be an interesting, as you said, the year ahead. I think we've already conceived with buy now, pay laters everywhere. It's just going to be what other industries it'll be in. It'll be interesting to see how the psychology of it evolves to how many contracts we want to have or how many loans we want to have at one time. And then it's going to be, how do we manage it? So how do we manage these various commitments? That's going to be a challenge.
Yeah, that's the key. Yeah, because it's how you manage it, because it's that creep effect, the subscription creep effect, where one subscription alone or one buy now, pay later doesn't look like it's a lot, whether it's, $7.99 a month for, I don't know what Spotify isn't that now, it's a tenner a month, or whether it's, Netflix or that. Standalone, they're not much, but it's the creep of adding another one. Like, for example, like I have a Spotify account, which is
so do we.
Spotify account, and kids use it, but and I could be out in the garden doing something and they'll take it off me and I'll have to go in and shout at them and tell them, I'm using it, get off it. So they were asking me to, obviously over Christmas, we're all at home and we're all using different devices and all the rest. They were asking me, can we get the family Spotify account? And I said, we absolutely can. We sure can. As soon as you go out and get a job, we will get it. I said, but I'm not paying. I said, I'm not paying the extra $7.99 a month that it will cost. But I said, hey kids, once you guys start working, we will get the family account. No problem. So it's just that creep. It's easy to say it's only $7.99. It's not, So anyway.
This is a part of the subscription economy that people were talking about 2 years ago, is more and more of our bills are now subscriptions. So we're paying back a credit card loan, we're paying back a bank loan, we're paying back a credit union loan, we're paying back a buy now, pay later loan. We have Netflix, and these are all just subscriptions that are, going out week on week, month on month, whichever your payment is. And I think as you were speaking, I was thinking, God, really managing that is all about automation. And open banking would really help if that was in ship shape for doing recurring payments properly, because you could manage recurring payments, you could change the recurring payments, but automation is the key to staying on top of it. If you have to make human decisions every week, every month, you'll drop the ball. Something's going to happen, and the costs and the implications of dropping whatever ball you have are significant in some cases, like the cost of missing one mortgage payment. Like the alarm bells that are ticked because you've missed a mortgage payment are much more significant than if you don't pay your Spotify. Yet the bank may have paid the Spotify and not paid your mortgage payment. So automation's really key. And the other part of that is some people really need to be able to manage manually which ones I want to pay now and later. I want to push that out. I want to bring that in. They want that manual control over it. So you've got to find a way to give people the way to be able to approve, maybe move things around, make decisions, but feel they're in control of their money. And that really came through from one of our credit shift interviews with Sean O'Toole early in the series. He's a former senior executive at American Express. He was there. Money's all about control. It's all about having control or feeling you're in control of the money. And how do you get that feeling of control? And people put it in different buckets. They put it in different cards. They put it in different places so that they have more control over their spend. And I just feel that there's, like the little bit of pressure will come off maybe with the interest rates. Inflation's definitely coming down. I think we're going to see a reduction in the pressure in 2024 that there was in 2023 and 22. I think that's definitely the case. I think we're still looking for some decent innovation to flow through from the open banking, to see that push through more. I think once that happens, it gives us some of the tools to manage this better. Anyway, moving on to a third story under this second section, I found under AI, always like to keep an eye on what's AI innovations happening. And what about AI to run your audit function? I saw a great blog post from Gilad G. Amir, digital operating partner at Pollen Street Capital, and he makes a great case for how LLMs will help auditors rather than replace them. Here's the bit that caught my attention. The audit process for small and medium enterprises or private businesses typically includes verifying key aspects of financial items in the balance sheet and profit and loss statement. These include the existence, accuracy, completeness, and proper classification of financial items. Auditors employ various methods like external balance confirmations, flux analysis, transaction sampling to ensure the financial statements accurately reflect the company's fiscal position according to generally accepted accounting principles. And I was just thinking about this and I went, that's such an obvious case for using an AI. And it did reflect some of the way that we've been looking at auditing conversations and being able to know what was said to whom, what was offered, why was it done that way, and being able to audit your conversations. And this was just taking that concept and going, well, why couldn't you just upload your general ledgers and your, profit and loss accounts and then say, well, give it access to the scanned documents, give it access to transactions, and then just allow it to audit the, all the transactions. If it appeared on your transactions, where has the transaction occurred? Is there a document against it? Is there a signature on it? Could the AI actually do that? And I think, yeah, absolutely, it'll do that. I think in the short, medium term, Gilad was saying LLMs will generate bespoke audit plans based on manual input from the audit manager about the audit risks and areas of focus. LLMs will then execute most, if not all, of the audit procedures with the human in the loop to verify certain aspects and continue training the models through manual reinforcement. And it's another great use case for how some form of LLM-driven co-pilot will eventually change the way we work. And I think I think this is something we've picked up now in a couple of the credit shift updates. You see examples of other types of co-pilots coming out for specific functions, and they all seem to be there to help the assistant, to help whether it's customer service agent or help the auditor or help the tax assistant to do their job better and maybe change the nature of what they can do. I'm sure that rings some bells with you, Cormac, given what's going on with Webio at the moment.
Yeah, so this one's, for me, as you know, I'm a qualified accountant by profession, so that's my background. So I've been through, audits for the last 25 years, so I'm very, very familiar with this topic. So audits, as we know, are very manual processes. Typically what happens at the start of an audit, you get to meet the senior partner, have a cup of coffee and a few biscuits and a chat about what's going to happen. And then the trainees all come in and actually do the junior trainees come in and actually do the audit. So before I go any further, this is obviously going to happen, right? This is an area that's ripe for disruption, and AI and Gen AI is perfectly positioned to make that disruption happen, right? So let's take that as a given. This is going to happen. The only kind of concern that I would have is that the audit process is a superb training tool for junior trainee accountants, right? You really get to know accountancy. You really get into the absolute detail of what's going on in accountancy, right? You're getting into the transactional level, what's happening in debits and credits, and it's a superb way for trainee accountants to learn their trade and to understand how financial statements work and how things tick and things to look out for, right? So if we use AI to remove that, and now suddenly this is all automated, what are we losing in terms of the skill set for future accountants down the line? How do we ensure that future trainee accountants are receiving the training and the base level, like this is the foundation level, right? And the real life experience. It's one thing doing your qualification and getting qualified and reading loads of books and doing exams and all of that happy stuff, which has to be done anyway. But this is like you're in the trenches. So let's take it as a given that this is going to happen eventually, and this manual audit process will get automated and we'll use AI and they'll learn, and this is all great. I'm just thinking of the human side of it, and the level of training that they need and the real life experience that they get. So that's my kind of takeaway on this one. It's like, okay, we got to ensure that we're producing. Unfortunately, folks, I got bad news for you. Accountants aren't going to go away anytime soon. So we need to ensure that we have good accountants and good advisors. So that's something I was kind of thinking about.
Well, the thing that rings for me on this is I was reminded of airline pilots. They don't train on smaller planes and crash those until they get good at it to get to a bigger plane, right? They go through hours of simulation environments. They are, just better and better simulators. And then, of course, there's nothing like having your real life at risk because your brain acts differently. So you have to be sitting in an actual plane, whether that's a simple bi-wing, and then you get to a bigger plane and a bigger plane. And so I think what's going to happen is just the pathway to competence is going to be different. Like technically learning, what button to push, what dial to watch, that's going to be simulation environments. The thing that everyone kind of, I think, implicitly says all the time about gaps is it's the stuff that you don't know, that you pass on to somebody. Like, I don't know, something about that. It kind of, would you take a second look at that? Or would you check that fella out a little bit more? I don't know enough about his background. And you find out, they were involved in 3 fraud situations, and therefore, this set of books you should really, really analyze because the background of the person is a bit suspect. So when people say the tacit knowledge, the things that you pick up from working around senior people, they're not always kind of codifiable. It's that things you pick up from working around other people. I think that's in every industry. It'll just be interesting to see what exactly that is and how important it is or not. I think we look at this from the customer services industry in the credit and collections world, and we see some companies that have very low turnover, relatively speaking, of agents, and we see some that have very high turnover of agents, relatively speaking, and they've got different development challenges for their people. And, I think it's just the length of time that it takes you to get someone up to being competent to be able to deal with live customers. I think that can be shortened. Obviously, there's going to be some different types of supervision that happens, but AI is going to be across it all, in giving you hints and giving you whispers to say, watch out for this or look out for this, or maybe ask a question about the other. It's going to be just embedded in the way we all do everything.
Yeah. Look, we we know that we're actively working on that, and the concept of a co-pilot sitting beside agents in their context and in their environment is going to happen and is happening. There's no two ways about that. Yeah. So.
Yeah, I think just the thing that it makes this such a huge, just general trend, like this isn't specific to our industry. This is every industry and every job. Like every job is getting a co-pilot. Just, you got to figure out how to make that happen. And, cause that's just what's going to happen. As I said, I've never been more sure of anything in my life. Section 3, let's move on to some interesting reports. We always like to keep our eye on reports that might be interesting to you in your own strategic planning and review process. In a recent study conducted by NatWest, it was found that over a quarter, or 27% of British small and medium-sized enterprises are grappling with unpaid invoices, ranging between £5,000 and £20,000. The issue of late payments is widespread, affecting SMEs across the UK. On average, 36% of monthly payments to these businesses are delayed. London-based businesses are particularly affected, with 41% of their payments arriving late. SMEs are crucial to the UK economy, consisting of 61% of its employment. However, 55% of these businesses report an increase in late payment over the past 6 months, exacerbating the challenges posed by the rising cost of doing business. One of the most significant impacts of late payments is the time spent chasing invoices. Nearly half, or 46%, of small businesses cite this as a major issue, with 31% spending 21 to 30 hours each month on this task. This time could be spent investing in enhanced customer service, developing new products, or other areas of the business. Now, cash flow disruptions are another major consequence of late payments, with 44% of SMEs identifying this as a pressing concern. Volatile cash flow can severely affect business planning and jeopardize the ability to pay suppliers, staff, and retain clients. Now, what we would say here is digital solutions to these challenges provide businesses with a swift and straightforward way of collecting payments. These systems eliminate the need for businesses to request and store card details, payments being settled instantly, they aid cash flow. Additionally, the process is simplified and secure for customers, and often they don't need to enter their own credit card details again. Currently, 55% of SMEs receive payments via bank transfer, while 33% are paid by card. So again, Cormac, I think, if you say here, late payments are not always intentional. 41% of customers admitted to simply forgetting to make a payment. 21% delayed a payment due to difficulties in finding account details and stuff like that. I think that you can take the reasons why people give their pay late with a grain of salt. But nonetheless, if we take it at face value in some of the other research I've done around this, they're often small little details, small little numbers that weren't correct, account details that weren't correct, and things get pushed back because they weren't done correctly. And it's a great excuse for companies to say, well, we can't pay this. It's the wrong details, put it through again. And the number in here of time spent, like that 30 hours per month chasing this, was like, that's a full week.
So I'm smiling away, Paul, as you're reading this and talking about it. So look, you and I have been involved in startup businesses for longer than we care to remember. So first of all, I'm surprised that the NatWest found that there was only 27% of companies that were grappling with unpaid invoices. I reckon the other 73% just didn't want NatWest to know they were grappling with problems in getting their invoices paid. Look, there's no quick solutions to this, right? Business is hard, business is difficult. That's why a lot of businesses fail. The vast majority of startup businesses actually fail, right? So, this is something that's going to be around for a long time to come, and it's almost part of business trying to grapple with this. We've seen it ourselves. We suffer from this in terms of sometimes getting paid, and down through the years, I've been on the other end of the scale where I have had those same reasons. I forgot to pay. I couldn't find your bank details. I didn't get your invoice. The dog got sick. I had to go to the vet, and fortunately, I couldn't do it that Friday, and I can only pay once a month, so it'll have to be the end of next month on the Friday. So look, I don't mean to be dismissive of this, but it's just something that is a real challenge for all businesses, and it's a real challenge. There's absolutely no doubt about that, and it's a cycle, right? So if I'm company A and I can't get paid by company B, well then, and I owe company C money, I'm not going to be able to pay them money. So that's just the way it goes. So what can we do about it? Yeah, you've mentioned some things there in terms of streamlining and all the rest, and I'm sure we'll be continuously looking at that, and automation plays a big part in this, right? So if you have got a good accounts receivable system in place that's automated, that can kind of take away that 41% of customers that say they've simply forgot, or 21% because they couldn't find the correct details, right? So if you can automate your process and have regular contact with people who owe you money, you're going to take away some of those reasons pretty quickly, right? So there is no doubt automation will and does play a real part in this. Like, you even see now accountancy systems that talk to each other. So like if I'm on Xero and my customer's on Xero, and you can share invoices and do all of that good stuff across the same packages, or it could be Sage or Intuit or whatever's out there, But yeah, look, we could be sitting here in 10 years' time and we'll have the same paragraph on the same topic. And I know governments try to promote it and try to, do things to help companies and all the rest. Hey, you know what? Government bodies could pay their customers on time as well. That would really, really help,
We do see that. Yeah, we do see that if government bodies paid on time and local authorities paid on time, that would really help people out in their financial planning. And I think the government in the UK is trying to get their arms around that as an issue. I think, Cormac, the thing that came to mind with this was chasing down the details. Like, why is a direct debit not working? What type of error rates are you getting across the board? And it's detail. And we see this all the time working with our own customers, is they chase down the detail and they fix that bit, and then they fix the next bit, and then they fix the next bit. And by doing that, like in a steady rhythm, they're eventually getting 1%, then they're at 5%, and then they're at 15%. And pretty soon they've made a significant impact. And I know that I shouldn't be surprised, but sometimes when you're working in AI, you kind of get carried away with the big picture, and you miss the fact that even just capturing someone's date of birth, the next payment date, their address, just those basic details, and getting those confirmed and matched and approved, just getting that to the next step. Or if someone's going through a payment gateway and understanding the 200 reasons why that thing might not have worked. It's a process. You stay on top of it. You drive it, and you take it down.
Process, Paul.
Yeah.
Process. You just hit the nail on the head there. It's just process. Like, I'll give you an example. We have a supplier, and they will very kindly, a week before an invoice is due, will send us an email saying, hey, just a friendly reminder, just to let you know, the invoice is due next week, right? So that's grand. Brilliant. Yeah. Do you have everything you need? So if the invoice isn't paid next week, you'll get an email saying, hey, that invoice wasn't paid next week. Just checking to make sure or it wasn't paid last week. Just checking to make sure you have everything you need. And that's an automated process. It's not, that's just been put in place, a process, and it works, right? It certainly works. So that is the key. I think putting processes in place and automate as much as you possibly can. And tone of voice, excuse me, tone of voice is very important too. people are more likely to react to a friendlier tone of voice than a sterner tone of voice, right? In the beginning, those early stages, like if somebody has a communicate to you that's friendly and says, "Hey, just checking that you have everything, and we're here. If you don't, we can get it for you." Or an email if you haven't paid, it's like, "Hey, look, I'm sure something must have been up. Is there anything we can do to help? Let us know," is much better than a sterner tone of voice. Now, obviously, if things get to a later stage, you got to use a different tone of voice, So,
I think because we're a specialist in this area, Cormac, I can tell you that the tone, message implications across the whole cycle are different from 0 to 30, 30 to 60, 90 day plus. And that whole journey needs like careful attention at each different stage. And it's not the one tone. It's not the one process. It's not the one question. And, what we found is, not only is it not a generic solution, but it's a very specific solution in credit and collections. So listen, thanks again for joining us, for our first of the year.
Yeah, pleasure, Paul. Pleasure.
We have some really interesting interviews coming up this quarter for the Credit Shift interview. Keep your eyes on the channel for those. Some really interesting people and a great mix of people. We're looking to bring in now some people whose daily job is managing credit, running credit for fairly some big companies, and sharing some of the challenges that they see. We'll be bringing in hopefully some analysts and people who are get a broader view of the market. And so keep your eye on that. They're always interesting interviews, and looking forward to learning what I can from those conversations as well. So until next time, thank you very much for joining us. Don't forget to check out the Webio.com website to see what's up with Webio. Some interesting news stories will be coming up there in the next few weeks, so keep your eyes out for those.